Hello and welcome to Rivkin's video tutorial on the Parabolic Stop and Reverse, or the PSAR. The Parabolic SAR is a technical indicator that is based on both price and time, and it's used to generate reversals in trends, with the SAR referring to the stop and reverse. Now, the idea is that the Parabolic SAR is used as a trailing stop loss and then used to reverse a position on a close above or below this level. Originally, it was developed by Wells Wilder in 1978. The calculation, though, it's very complex and burdensome. It's well beyond the scope of this tutorial. Thankfully for us, trading systems and trading platforms calculate it for you. To interpret this indicator, firstly, we just need to look where it is in relation to the price. So when our Parabolic SAR, represented by these red dots, is below the price, the trend is up and we should be long. When the Parabolic SAR is above the price, we can say that the trend is down and we should be short. As the price continues in a direction of the trend, we can always see that the Parabolic SAR continuously follows it. It never decreases. So if the trend is up, it will only increase. If the trend is down, it will only decrease. And this is designed to prevent the manual adjustment of a stop loss and to protect profits and capital. Now, the steps that this Parabolic SAR indicator moves in are based on an acceleration factor. This can be adjusted to change the sensitivity to movements in price. So if we were to decrease the acceleration factor, the sensitivity of our Parabolic SAR will decrease, in effect widening that stop loss. And that provides a little more leeway for some traders. At the same time, if we increase the acceleration factor, we would make that stop loss much tighter. By increasing this acceleration factor, we increase the risk of the stop loss being triggered and reversal signals generated. However, the trade-off to that is that we do tend to protect our capital and profits a little more aggressively. This is really where it comes down to the individual preference of the trader. So on the first chart here, I've got Telstra TLS with an acceleration factor, which is the standard factor of 0.02. Now we can see from late June that the price trends strongly higher all the way to this high at 586 on the 21st of July. During this time, we can see that our Parabolic SAR, represented by our red dots, does trail the price higher continuously, doesn't move lower at any point. On the 26th of July, we get a close back below this Parabolic SAR level, and that close below our trailing stop loss then signals to us that there is a trend reversal, that we exit long positions and exit short positions. And we can see that the Parabolic SAR then flips above the price, showing that it's now in a downtrend and acting as a stop loss for short positions. I have another chart of Telstra here as well, and the difference on this is I've changed the acceleration factor. I've increased it by 5 times to 0.1. And you can just visually see how much closer the stop loss gets to that trailing price. As a result, you can see while it is much closer, we do tend to get a lot more false signals than we did with a standard acceleration factor of 0.02. For example, in this uptrend from June to July, we didn't get this stop and reverse signal here, nor at the beginning of this downtrend in late July did we get this stop and reverse signal here when the price closed above our Parabolic SAR. And that is our tutorial video on the Parabolic SAR.